Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only and I am not a financial advisor, so please do your own due diligence. For those of you who do not know, I have over 20 years experience teaching accounting, economics, business and law. So through this channel I would like to provide some stock analysis and also at the end a short 5-minute trading lesson to increase your knowledge, reduce your risk and improve your strategy. So please stay tuned till the end. For those of you who've not opened a Trading 212 account, there is a link in the description where you can get a free share. This will also help support the channel and I would also get a free share. So without further ado, let's get started on the first update. Okay, we're going to start by looking at the update on the proposed merger between Lucid Motors and Churchill Capital, ticker symbol CCIV, on close of play Friday. Ticker symbol CCIV closed up a healthy $34.61, and this was a move up of in excess of 14%. So that's positive news there. Let's see what else happened. So on CNBC, I'm sure you are all aware of the interview with the CEO of Lucid Motors, Mr. Peter Rawlinson. So we're going to have a look at some of the key aspects of that interview and see if we can find any clues. So let's first of all start off by looking at the plans. So what were the plans of Lucid Motors that were discussed in the interview? And we can see here, if you look at the screen, first plan they in terms of revealed by the CEO, where there was going to be a plant in Arizona with a capacity of 400,000 units, 6 Lucid studios, showrooms, and they are open now in California and Florida. So this is very, very positive news for people wishing to buy a motor from Lucid, because what it shows is it shows the company is much further ahead from an EV point of view of many of its competitors, because we saw in this interview it is ready to start selling in 2021, which is absolutely fantastic news for potential investors, especially if this merger goes ahead. Now let's have a look at what was said about production. So in terms of production, we can see just from the screenshot there, the chairman stated that the Arizona factory is now fully built, fully commissioned. It's currently in phase 1 and it has capacity of 34,000 units. So that's positive news on production. Well, let's see what was said about the models. In terms of the models, Lucid Air is a luxury EV that will start at $69,900 and go up to 100 in excess of $160,000. So these are some luxury top-end models that are planned. And what are the opportunities? So let's have a look at the opportunities. We can see here it was also revealed by the chairman that they were looking to offer technology to other players in the space in order to offer it at a lower price point maybe in the future. So basically the overall conclusion is Lucid Motors is ready to start selling in 2021. It's a fantastically developed, excellent design vehicles, high end, and we can see that in this interview that the company certainly has a positive future. Now, with regards to the merger, Mr. Peter Rawlinson was asked about the merger, and we're now going to look at the response. So once the question of merger was asked, there was no denial and there was no confirmation. So let's see why this was the case. So before we look at the case, so people delving into this, there have been many comments stating that there was a smile when he was asked. So the smile in terms of psychology or body language may indicate to some people that the merger is on, but he cannot say. So why can he not say? So let's have a look at this. One of the reasons why he did not confirm and he did not deny. So if we have a look at the New York Stock Exchange Listed Company Manual, Section 2, disclosure and reporting material information. So under this section, one of the things that we can see here that is stated is if rumors are false, they should be denied or clarified. So if we read into this this section here, we can see that if it says, as I said, it says if rumors are false, they should be denied or clarified. So if we read into this clue here, they were not denied. So this also creates more substance to the claim that the merger is on. Okay, so one more thing that I would like to do is just give a little bit of a shout out to one of the comments, and this is a shout out to Brent, and Brent is from Beverly Hills, and he said Lucid removed all display cars from Beverly Hills, and I assume they might be having a surprise merger event with that cars at the Super Bowl. Hope this helps. So again, I did check, is there a Lucid Motors showroom in Beverly Hills, and according to the research, yes there is. So again, a little bit more fuel to the fire in terms of rumors. So thanks for that update, Brent. No confirmation, no definite answer in terms of yes, there is a merger, but lots and lots of circumstantial evidence building up. Possibly a huge presentation at the Super Bowl. Let's wait and see. Okay, next stock analysis I'd like to talk about today is ticker symbol SENS, Senseonics, and I did carry out a bit more of an in-depth overview of this company, so please refer to the previous video there for much more detail on ticker symbol SENS. So I believe there are some developments here that I'm going to share, but before I do that, just to remind everybody what are Senseonics Holdings. So they are a company that are involved in glucose monitoring. They have a new product, and this new product is an implantable CGM systems, continuous glucose monitoring system, and it's for people with diabetes. It's a fantastic new product. The company is growing fantastically. I initially invested in ticker symbol SENS, initially obviously using research and looking at the developments of this company. I initially invested in this on 23rd of December 2020. At that time, if you check the screen, my buy price was just over 59 cents. So I initially only did this as a very short trade for one day. So on the 23rd of December, I bought shares in this at 59 cents. And if you can see the day after, 24th of December, I sold these for 99 cents, so just almost $1. So this represented an increase in profit of over 60%. So after one day, I cashed out a return of over 60%, which was fantastic. However, in hindsight, you could say that was a bad decision. But you can also look at the positive side. Well, 60% return in one day is a fantastic decision. I have now reinvested in SENS, and the reinvestment now to buy back shares in here, if you check the screen, I reinvested on the 26th of January. However, the price now is $2.76, so much more expensive. If I had kept my original shares, then I was looking at probably in excess of 350% margin, 400% return on my investment within a month. So that's the benefit of hindsight. However, I think there is still room to play, and from my current investment, I think I'm going to keep this one a bit more long term, because I'm going to share some developments, and hopefully these will help. So if we have a look at the close of play on Friday, we can see ticker symbol SENS closed up a healthy 13%. So in terms of my current buy price, $2.76, it's closed at $3.03, so I am already up 8%. So that's good news. Obviously not the same 60% return that I had in one day before, but I'm still very positive about this stock. So let's have a look at one of the reasons. So if we have a look at the screen there, we can see that Senseonics milestones are listed there, and it starts from the 2016 where they had the EverSense system 90-day, and what we are interested in is 2021. So this is where I think there could be a general movement upwards again. So if we look at 2021, the new EverSense 180-day sensor is waiting for anticipated approval. So this was delayed due to COVID. I believe as soon as this is approved, there is going to be a good spike in the share price. It's a good opportunity to get into this stock now, because I believe as soon as that approval is announced, the share price will spike. So good opportunity now to get into this stock in anticipation for this approval. And it's a great stock in terms of going forward. What I'd like to do now is just compare this with a similar stock, and if we have a look at the screen there, this is just in terms of an analysis of another stocks from Reddit. So let's have a look at this now. So if we have a look at this Reddit analysis here, we can see there that if we look at the ticker symbol SENS, at one point it did reach $3.27, but it obviously, as stated, it closed at $3.03. So what we can see here, if we just look halfway through the article there, we can see a similar company called Dexcom. They have a market cap of 40 billion. SENS, ticker symbol SENS, SENS has a market cap of 1 billion. So we're looking at a massive upside here, huge growth potential, and there is a potential for this to obviously go up to 4 billion. One more thing that we can see from here, obviously we know that the reviews so far for SENS in terms of patients, retention rate is high, patients are satisfied, the product seems to be working very well. And as soon as this approval comes through, it's going to be positive news. Okay, so in terms of a strike price for ticker symbol SENS, closed at $3.03. It's still a penny stock, so still very volatile. My current investment, I will be holding this time. I'm not going to be cashing out any of this stock. I'm going to be holding it for the long term now. However, if you do want to enter this stock, I would consider any entry below $2.80. So put this on your watch list if you're looking to hold this long term. It's a fantastic stock. I'm just going to show you the growth rate. So over 1 week it is up 26%. Over 1 month it's up 219%. Over 3 months it's up 700%. And over the year it's 646%. So obviously my initial price on this was just over 66 cents, and as we can see now it's closing at over $3. So huge growth, and this time I will be keeping my shares for the long term. Okay, it's now time for lesson of the day, and lesson of the day today is recognizing the golden cross. So please refer back to previous videos where I did a bit more in-depth overview of moving averages, as this is related to moving averages. So the general guidance here, that is when there is a 50-day moving average and this crosses the 200-day moving average, it's called the golden cross. So the golden cross is a very strong bullish signal. So let's have a look at that here and how that looks in terms of a chart. So in terms of a chart, we can see here an example here. The black line there represents the 200-day moving average. The blue line represents a 50-day moving average, and as you can see the candles there, the green and the red represent the share price changes in terms of going up and going down. So this is just a specimen example here, and we can see the golden cross there is where the two lines meet, just at the right hand side. So as you monitor your investments, look at the 200-day moving average, look at the 50-day moving average using your graphic analysis applications. You can anticipate that this is going to happen. So before this happens, that's a bullish signal, and it's an indication that the movement is going to go up significantly. So it's a good idea when you have some shares and you're looking at buy, you're looking at sell, or you're looking at further investments. So certainly look at this. Although everybody who uses charts, it's a good tip to certainly increase investment or be prepared to cash out once the movement goes up. Hope that helps, and thanks for joining me. Please join me again in the next video.